Is the government shutdown and no deal on extending the debt ceiling taking a toll on the markets and the economy? Joining us now to talk more about all of that, Bruce Kasman. He's chief economist at JPMorgan Chase, and Carmine Grigoli, chief investment strategist at Mizuho Securities. Welcome, gentlemen, to Nightly Business Report. Let me begin by talking about the economy and start with you, Bruce, if I may. What is your view on the economy if the standoff goes right up to October 17th, or if it goes a little beyond that? What impact is that going to have on the economy? How much is it going to shave off of economic growth? What do you think?
I think the direct effect of the shutdown itself will be limited. It'll take a few tenths off the fourth quarter. I think the indirect effects of hurting confidence and increasing uncertainty will be a little more. And the real question is what we actually do when we get to the debt ceiling limit. If we have a solution to that clears that out and doesn't create ongoing problems, I think we'll have relatively limited damage. But the uncertainties about how we get to that is what's doing the damage now. And I wouldn't want to express enormous confidence on how we resolve this, which is really the big issue.
Carmine, let me turn to you and what I should do with my money. If I am a typical investor with 60% stocks and 40% fixed income, is there anything I should be doing right now? And let me put it another way. Why shouldn't I be raising cash against the possibility that this really goes off the tracks?
Well, I wouldn't panic. I think that's the key here. If you go back in history, what you find is a pretty compelling case to buy the weakness. Markets typically and shutdowns do not react in a very big way. Corrections are normally short, shallow, and you recover relatively quickly. In fact, if you look at shutdowns of 10 days or more, you see a decline on average of about 2.5%. That's comparable to what we're seeing today. There's no question that fear is intensifying here. I would be using this as an opportunity to buy, and it's not an environment where you should be selling.
Carmen, we are not getting government reports, obviously, because of the shutdown, but we will start getting earnings reports starting tomorrow with Alcoa reporting. Will investors be paying attention to those earnings reports, or are they going to just keep all of their sights on Washington and what's going on there?
It's going to be hard to shift the focus to earnings, but nonetheless, I think it becomes very important, especially in this particular earnings season. What we've seen here in the last couple of months is earnings expectations have been chopped in half. Analysts that have been expecting 6% growth are now expecting S&P to grow only at 3%. But if you look at the breakdown between overseas earnings and U.S. companies that operate domestically, you're seeing a big sea change occurring, where companies that are reporting from overseas with big overseas earnings are showing pretty big pickup, a pretty big improvement in earnings. And I think that that's going to continue into the fourth quarter of this year.
Bruce Kasman, you probably just heard the president describe the possibility of a debt default or a failure to raise the debt ceiling as bringing about the possibility of economic catastrophe, his words. Do you see it that way? And would the failure to make good on the federal government's obligations, even for a couple of days, maybe even for a couple of hours, produce the economic catastrophe that so many seem to fear?
I think we have to consider what actually happens. I think if we stop paying our bills and stop paying Social Security, defense spending, all of the things that we do, we would, over a period of a few weeks, create a fairly significant economic damage that would be far worse than anything we're seeing right now. A day or two by itself probably won't be so big a deal. I think we have to recognize that it's 3 to 4% of GDP to stop increasing our debt. The second issue, if we miss a debt payment in terms of interest or principal, that I think has unknown consequences, and I wouldn't want to underestimate the potential impact of that. That we think is very unlikely, but it would be a very scary thing to have to experience.
What about what all this does to Fed policy? Does any of this uncertainty in Washington change the calculus of what the Federal Reserve will do next, especially since they're working in a vacuum with all of the, the lack of the economic reports? What's your thinking, Bruce?
Well, we think the Fed already made a decision on September not to begin tapering, partly based on this calculus. We think that the length of the shutdown, the uncertainties that it's building, and the difficulties in seeing what the economy is doing afterwards may push them back into next year. The idea that they tactically wait, and if the shutdown and debt problems are behind us, they can come back on track, looks less likely now with the extended shutdown, the lack of data, and the potential risks that still lie ahead.
All right. We'll continue watching this very closely, as I'm sure you will too. Bruce and Carmine, thank you both for coming on the program. Bruce Kasman of JPMorgan Chase and Carmine Grigoli from Mizuho Securities. Thank you, gentlemen.